All right. Hey there, crew. Thanks for watching. I'm going to be sharing my screen with some of the top questions for the week. Happy Friday. Hope you're having a great week. So let's dig into what has been going on because there's a lot of housing news that have come out recently and a lot to talk about. So, Rob, thanks for the comment. Yes. So I don't make the thumbnails or titles. That's done by a team that's outsourced, but I understand it worked because it got you to comment and to click through, and that I guess is their job. So I don't pick sides here. I just look at the policy individual and decide for myself. I don't like politicians in general on either side. They're very, very self-interested, and I don't think that's good for the country at this point in where we're at. So let's go ahead and share my screen. Can you see it? Let's see. Just want to make sure you guys can see what I'm seeing here. Can you see my screen? YouTube live Q&A, just drop a comment if you can see my screen and I'll get going. All right. So vital signs. I'm just going to assume you guys can hear me. Go ahead. Vital sign says, good to see you. Yes. Okay. Thank you for responding. For your response. Sweet. All right. What's up, Esteban? Good to see you finally come around. Admit you were wrong with all the doom talk on home prices. Actually, quite the opposite. The data coming out actually is showing that prices are moving down and that foreclosures are moving up just like we expected after there were no FHA or VA, practically no foreclosures for the last 4 years due to the administration and what they chose to do to, prevent that from happening. We're going to start seeing that pain show up in Q2, Q3 of next year. So look, real estate is not like the stock market where it's going to drop 3 to 5% overnight. This is something that's going to take years, right? So when 2008 happened, it didn't really bottom all the way until 2012. It took 4 years, and that was an extreme circumstance. So it just is one of those things that you have to wait out. Of course, the government's going to do whatever they can, just like last time, to prop up the market. It's not going to work because the underlying consumer is really, really in a tough spot. They're already loaded up with massive levels of debt. The government's loaded up with debt that this type of crisis we're likely not going to get out of unless the government starts to turn directions very, very quickly. So the government can come out with creative financial engineering is what we call it. I used to actually be a financial engineer at a Wall Street bank, so I understand what they're trying to do, but they're just messing with the terms of these loans versus actually looking to make it truly more affordable. And of course, this is what's going to happen when you have home builders and bankers in the White House. They're going to try to find ways to extend the rally as fast as possible. Or as long as possible. And that's going to have massive implications for the housing market. But I don't think with the demographics and the silver tsunami that we have coming up, especially here in Florida and Texas, that they're going to be able to do anything to combat what's coming. And, what we could see with interest rates is going to depend if the Fed decides to start buying mortgage-backed securities. We had a sell-off yesterday in the market because, there was more Fed folks coming out saying, hey, we might not do a rate cut in December. And so all the AI stocks got, basically pummeled because they want lower interest rates. That pushes it much further for them. So look, this stuff is coming. It takes time to play out. So let's get into the Q&A. So if you have any questions, go ahead and drop it in the chat. Love to answer your questions as we move along here. So the number one question that we got for this week is it better to wait for a crash than to buy now? And so obviously, yes, my opinion is yes. I do think it's better to wait. It depends on where you're located and where you're buying. If you're in Florida or Texas or in the Sun Belt areas where there was massive amount of inflation in home prices, about 52%. If you're in the Northeast, it might be a different conversation. But I do think that it makes more sense to wait at this time because we are starting to see prices come down. Listings are moving up. People are rage quitting when they can't get the price that they want from the seller perspective, and they're waiting for next year to put it back on. So I do think there's going to be a lot of inventory coming on next year. I think we're going to see a lot of distress coming in next year. And if the stock market cracks at any point in time, that will really reduce the confidence that is in the housing market. So it all goes together. So I really think that it's going to be it's best to wait and rent for now than to buy. Now, obviously, you've already bought. Just hold tight. There's a lot of issues with owning real estate, especially in today's market. The cost of repairs, the cost of insurance, the cost of taxes, everything is going up. And so for the most case, I would say wait and watch and save your money and pay down your debt as much as humanly possible. So let's see. Esteban says, Florida and Texas, I can see becoming a safe place because of the building going on. This is new California. My new 100-year-old house will soon be worth 1 million. Yeah. So, the problem is, especially with Florida and Texas, is that we had so much new construction come in to these areas. And right now the builders will buy down your interest rate to 3 to 4% to be able to, convince you to come in and get a lower payment to be able to purchase the house. The problem is if you only stay in the house 10 years, you sell the house in 10 years. Of course, your transaction costs round trip on the way in and the way out are around 10%. So your house has to go up more than 10% during that time period just on the transaction costs to break even. And of course, you're going to have repairs and maintenance. I have, customers that have bought a house and in 3 years, there's been a lot of issues that the builder hasn't come out and rectified, unfortunately, and they've had to come out of pocket for those type of issues. So just because it's a new house doesn't mean there won't be a lot of repairs. And of course, insurance and taxes have been going crazy. So when you're planning these things, I think it's really important. The timing is everything. So when you're either in the stock market or the real estate market, timing of when you buy is the number one factor that's going to determine whether that investment is a good investment. And literally, there cannot be a worse time in history in certain markets to buy ever. And unfortunately, Jacksonville, Florida is one of those markets where if it's not an absolute deal or you don't care about the financial outcome, that would be probably the only reason why you would purchase at this point in time. Versus waiting for rock solid opportunity to come in that will reduce your risk. It's not going to reduce all the risk, but we could definitely see a drop of we're already down about 10 to 12% in most areas. We could see another drop of about 20% over the next couple of years, which would put a lot of people underwater. And the demographics for Florida are not looking good. So is it better to wait for a crash than to buy now? We don't know if it's going to crash. The government will again try to do anything they can to prop it up. However, I do think it makes sense to wait and see. So this is another question that came through from the comments. I love your comments, guys. So why is the government so stupid and incompetent? And look, I don't think that they're well, yeah, some of them are stupid and incompetent. The reality is that a lot of people get into government because they have a pet project that really interests them, or they're doing it for financial purposes, or they're a career politician. So they're all going to look out for their interests. There's very few people that go into government to actually just serve the people. And I find this to be really unfortunate. And so you're dealing with constant manipulation from outside influences, inside influences, cutting deals with people to get, so everybody gets their little piggy bank filled up. And right now, I just think, just like with prior presidents, it's just grifting at the highest level. And they're just trying to extend the market to benefit the people who got them into office. They're putting in policies that are not benefiting the working class or the lower class. It's all to benefit the top 10%. And look, I'm in the top 10%. It's good for me, but I don't think it's good for society when you have the wealth disparity grow so rapidly within a short period of time. I would like to see more policies that are more geared towards helping people. I don't like the idea of sending out $2,000 checks to people. I think that's a really bad idea. In the meantime, I don't like corporate welfare either, where we're just giving money to corporations to bail them out when things get tough. So I don't like welfare on either side. I think people should, earn the money that they have, not just give it out to people. Or if you're going to have some sort of social safety net, there needs to be really strict requirements for that so it doesn't get abused. And that's my opinion. So, yes, the government does a lot of incompetent things, and they think like one step ahead. I think with the 5 policies that came out about housing, right? So we had the, just the 3. We had the 50-year loan, mortgage loan. We had the portability, and we had the assumability just this week. And I think the government, I appreciate them trying to find ways to make the housing market affordable, but that's not how you make it affordable. What made it unaffordable is, putting rates to zero, the zero interest rate policy by the Federal Reserve for years on end. That drove investors to go crazy to buy up real estate in specific areas. And now we're at this point where it's completely unaffordable for the next generation to be able to purchase because of the Federal Reserve's policies. Well, now they're just trying to influence it again to drive down rates and keep asset prices higher, even though the next wave of buyers is completely tapped out already. So they don't think about second order effects. They just think about, how can I drive things short term up as high as possible to enrich myself while screwing over the next generation of home buyers. I don't like this way of thinking. We really need a government that's going to be thinking 50, 100 years down the road. What can we make it look like? So people will start having kids. They're going to be able to afford to have kids, buy their house, get married, do all the things that traditionally, Americans have been doing in the past. Obviously this is still happening, but it's slowing down at a rate that is concerning from the demographic standpoint. So there's secondary effects. There's also consequences that they may not have thought of when they put these proposals in place. But I think right now the government is totally geared towards how do I prop up the market as much as humanly possible and never let it drop. And this is true with any president, right? Because if the economy's good, generally what you'll see is they'll get reelected, and if the economy's bad, they won't get reelected. So this is unfortunate that this is the case, and I think a lot of consumers and voters look past the fact that hey, we should be thinking down the line, not year to year, and that's really unfortunate. Yeah, so you'll never see a government thinking that far as from Esteban. Think in terms of 4 or 6 years. If the benefit doesn't appear in their term, why do it? Yeah, exactly. So that's why the government makes the decisions they do. They try to cut the deals for them while they have that piece of power that they have, and it screws over the entire nation long term. And I don't think that's good. So why is it that's set up this? Why is it this way? It's because it's set up this way, and voters vote also on the short term, and so we don't have any long term benefits. So is it better to rent a house than to get a 50-year mortgage? So when we look at the amortization tables of the 50-year mortgage, it is brutal. If you have a $500,000 loan on a 50-year mortgage, you hold it for 10 years, it comes out to you paying down in principal only $18,000. Well, we just talked about how the round trip buying and selling is 10%. So you'd be underwater $32,000 from the start if you held that asset for 10 years at a 50-year mortgage. So you'd have to expect it to, appreciate a certain amount, and then your repairs wouldn't be a certain amount for it to break even. At this point in the market cycle, I think it's probably best to rent than to get a 50-year mortgage. You're practically renting at that point, but you're paying the HOA, the insurance, the taxes basically to hold this asset. Also, you have to understand a 50-year mortgage has a longer duration, so the interest rate will be higher on the 50-year versus a 30-year. This is why it already exists, by the way. We have 40-year mortgages for non-QM products at a lot of the branches, and a branch that we manage, and basically nobody's done it for this reason. It's because the interest rate is higher than than the 30-year. So most people, it just makes more sense to do the 30-year. You don't want to double the amount of interest that you're going to pay the bank for $100 a month. It's not savings, it's just lower payment. It really doesn't make sense to do that. And the people who it would bring in to make them access the loan, I mean, these are people who are stretching their money anyway. So you're putting the most least credit worthy person from an income, salary, wages perspective into one of these products. I think you could get in a lot of trouble and get caught speeding. So I would be very careful. I think it's good, again, that they're coming up with creative ideas, though I do think it's better to rent this period of time. And by the way, rents locally, I know every area is different, but locally they're down about 10 to 15%. There's people dancing on the side of the street for apartments where they're saying, hey, I will give you 3 months free rent. So you can negotiate your rent every single year. So I think it's really, really important. So I don't know why recessions are always viewed as such a horror. It's healthy correction. Yes, exactly. We need a healthy correction, not only in real estate, but stocks and a bunch of other assets that have just gotten blown up over the last few years. That's not going to happen until the Fed stops and Congress stops spending all of our money. And unfortunately, it seems like there's no will in Washington to be able to do this. I got excited about Doge, and then obviously that was just used to cut Democrat programs, and then they shut it down. So that's unfortunate that happened. I was hoping that they would actually go into the Department of Defense and go after, see what's going on with Social Security, Medicare, Medicaid, all these, because it's the majority of the budget that go into these larger items. Instead, they went after, the social safety nets and everything else, which, I understand those definitely need to be improved. It's what are we going to do to move the needle? We have to go and have serious conversations about the big stuff that really matters, that's draining our country. Now, 1 out of every $4 that comes into our country just goes down to pay the interest payment. So, I mean, that's crazy. And the compounding rate at this is astronomical. So again, so a recession to a politician is hell. Enjoy that 50-year mortgage. Yeah, exactly. Might as well make it 100 years. That's right. So we could, why not make a 100-year car loan? Why not make a 100-year anything loan? I mean, we can just manipulate the terms and say it's more affordable. And so it's a big lie. It's not more affordable. It's more accessible. But just because it's more accessible doesn't mean that you should do it. Should I wait to buy? We just handled that one. So I had some rentals. This was a question that came through. I owned a ton of rentals here locally, and I owned some multifamily across the board. Why did you raise your rent on your tenant by 50% in 5 years? So number one, I think I bought this house in 2018, and then I sold it in 2023. And yeah, I raised it from about $2,000 a month to $3,000 a month. And so I'll tell you why. So, we're not capped because it's a non-primary. Your taxes go up quite significantly, like thousands and thousands of dollars. So what I did was I made a formula each year that said, here's how much my expenses went up. And then I just messaged my tenants and said, this is literally how much my expenses went up from taxes, insurance, and repairs. And this is how much the rent needs to go up. And then I kept my margin, which was honestly about $200 a month cash flow, which by the way is like nothing for a rental. Like, you should not be buying rentals for $200 a month cash flow. But even though I was renting this out for 3,000, there were other ones that were renting out there for 3,200, 3,300. So it wasn't a bad deal for them. Often there were like 3 tenants in the house. When you have to turn the unit, it's $5,000, $6,000, $7,000 to fix everything up, new paint, new floors, new carpet, etc., just to make everything, spruced up. There's always something when a tenant has stayed in the house for that long. So it's not something that I wanted to do as an investor. Obviously, I want to keep my margins because that's why I'm investing. However, it sucks for tenants. Like the expenses that come on to the owners, they're just passed on to the tenant. It's no different than the tariffs. Like, the tariff comes on and then it just gets passed on to the consumer because they're not going to eat that margin, or they're not going to operate for negative margin. It's not worth their time. So, there's a Goldman Sachs study that came out that said 70% of the tariffs are just immediately passed on to the consumer. And that's part of the reason why we have seen, I know there's a lot of debate on this, but there's been an increase in inflation and CPI up to 3%, even with shelter costs coming down. So the Fed's target is 2% for inflation. We're at 3%. So it makes no sense for them to cut in December. In my opinion, they're now flying blind because there's no data. This October jobs number data just completely disappeared. But ultimately, as an investor, look, whenever there's additional cost that comes onto you, you just pass that cost on to your consumer or client, and you keep your margins as tight as you possibly can to continue. And so it sucks, but that's just the reality of what it is, why I did it. If you have questions about that, feel free. So financial inequality is looking bad. Will it get worse? And what do you do? So before I jump into this question, I'm just going to go through the comments here and see what we have here. So let's see. We need more innovators, less landlords and private equity. Yeah, there's a lot of private equity, but it depends on the market, right? So these large single family rental aggregators, I used to do their loans for them at a Wall Street company. And I got to see all this. I mean, they only own about 4% of the supply of single family. And that's not a lot. So this isn't a case where they're completely dominating. By the way, they're net sellers. They're not even buying more right now. They're actually trimming their portfolio. So I definitely would love to see some more innovation. However, private equity did come in and price a lot of the first time home buyers out by gobbling up the inventory. That is definitely something that happened. And that's what they do, right? They try to get there before the buyer gets there so they can sell it at a higher price, or they can rent it at a higher price. So yeah, it depends. So Esteban says, if a bank gave me a 0.1% interest rate, I accept a 100-year mortgage. Oh yeah. I mean, that's what Apple did when the rates were, they did like a 50-year bond at 1% when rates were really low. So the rate that you have is really important. You have to assume that inflation will be higher than the interest rate for it to make sense for you to do it. So you get that, inflation, debt deduction. So, or reduction, I mean. So paying 50-year mortgage, paying upkeep for the bank's home, absolutely insane. Yeah, I agree. Anything to prop up the 10%, prop up the boomers. And by the way, the boomer conversation is unfortunate. There's a lot of boomers that have also been left behind that didn't buy. So by the way, it's not like all boomers are just absolutely crushing it. Yes, they had a good time frame that they were able to purchase, but if they didn't purchase, they are completely left behind, just like the next generation, and they feel absolutely trapped at where they're at in a really, really bad situation. So, all right, so let's go to the next question. Didn't they use these tactics in 2008 and it didn't work? Yeah, I mean, so they didn't use these tactics, they were talked about. I think that's a really important distinction. So it wasn't that in 2008 they were saying, okay, we're going to get rid of, credit scores or reduce the credit score as low as possible. We're going to do a 50-year mortgage, all this stuff. They started coming up with these unique products. What's interesting right now is we don't see any sort of massive cracking in the market, but they're already throwing out these type of options out there. And that's how we're at the end of the cycle is when the government starts coming out with anything to continue propping it up. And, it's just a massive indicator that that's where we are. Yeah, so if a boomer can't sell their house because no one can afford to buy, then they're screwed too. This is true. Although, I mean, they have this portability idea that's out there. But again, the idea of portability, porting your mortgage from one house to another, first off, they'd probably have to get congressional approval and change the way that Fannie and Freddie work to be able to actually do that on the conventional loans, right? FHA and VA are already assumable. They're not portable. But if you actually could port a house from one to the other, it would be most valuable for anybody who basically won the interest rate lottery that bought from 2020 to 2021 and still has that low rate. So you're just benefiting the people at that time point. You're not benefiting the next generation of buyers that needs to come in and have home ownership, right? Because we're seeing the median age of the first time home buyer be 39 years old, 40 years old, which is just, those are just absolutely crazy numbers. So, I like the idea because it would give, people who own houses the opportunity to move, and it would create more movement, but that doesn't actually make anything more affordable for the next generation, which is where I think things need to go. All right, so that's all I have for today. If you have any questions, I can hang around here for the next couple of minutes and answer them. I love you guys watching the videos and commenting. It gets me super amped up. I love having more conversations about each one of these topics. There's a lot of information that's coming out each week. So my process is I find the most exciting charts and data points that come out every single week. I analyze them, I put them into a presentation, and I share them with you with my perspective of what I'm seeing on the ground. So I've been in real estate for a decade now. I studied it in college as well. I worked on Wall Street as number one sales agent in my market. Now we own a real estate brokerage called Momentum Realty in Jacksonville, Florida. And we're the number two brokerage office by selling for volume. We invest in real estate. We flip real estate. I do private lending for agents to fix and flip homes. So, I'm seeing this stuff every day. So a lot of this comes from what I'm seeing every day, my, background in finance, and just sharing what I can to, get the word out about what's happening, because I didn't see anybody, like, this sucks. I saw nobody speak up about what was happening in our market. And it's horrible. I think there's a lot of people that just continue to push products on people that don't work and don't make sense. And if somebody could listen to this and make a better decision, that means a lot to me. Also, if you need a seller, you need a listing agent or a buyer agent in a market around the country, let me know. I've been, I've networked with the top people around the country, and I'm happy to share resources with you and get you in touch with somebody who actually knows what they're doing. Like 90% of agents literally are part-time, or they don't know what they're doing. Not that part-time agents are bad. We actually have a few that are pretty good, but the majority of the time you need to interview, you need to find the best one. And if you don't know the questions to ask, it's a really big problem. So, all right, guys. Well, if you don't have any other questions here, I'll see you next week. And as always, you can email me. I'll put my email in the chat, and you can follow my Substack newsletter. I've got about 27,000 people who follow me there. So not going to lie, I kind of wouldn't mind a place there to be a snowbird, but retirement is at least 24 years. Well, just wait. In the villages. Yeah, just wait. I think prices will go down in the villages. There's going to be, a ton of inventory, I think, for sale over the next 15 years, sadly, for those reasons. All right. Well, thanks, guys. We'll see you next week.